Good morning, everybody. It's Christian from Student Education with the 4 Majors Analysis Update for the 24th of April 2012. Hi, everybody. Just going to go over a quick review of the 4 Majors this morning on our daily charts. Let's have a look and see what's been happening. Well, a lot of indecision last week, and then going into Friday, we saw a really nice up candle, and then Monday, pretty much bleak. I think this candle we saw on Monday yesterday was primarily what concern about Sarkozy's problems he's had with the first set of elections in France. He didn't do too well, and his right-wing or sidekick was doing a lot better than he was, and we saw the markets moving lower yesterday. I think it was pretty much a bit of a knee-jerk reaction to the French presidential elections that were on first part of that presidential election that was on this weekend past. So we saw price pulling back quite noticeably to around about the 161% of this initial upside move here, but still closing higher than the 1600 mark, which happens to be the 20 period moving average as we speak. And if it can remain so, then we could see price still managing to move higher. CTC, the actual template itself, is only 2 parts ready. You can see we've got the blue arrow, blue candle. However, the CTC bars on either side remain red. We are still plotting lower swings, and you can quite clearly see we come from a high, we're swinging lower. So if price manages to hang on to this little area of support above the 1500, then we should see price moving to at least around the 2500 before we could potentially see another squeeze. Noticeably 2 fib bars coming together quite closely here at this resistance level, which happens to be the downside trend. The institution moving average still remains quite high above the price action, really telling us that market sentiment is still negative. However, as I pan out, you can see that US dollar has found a lot of support at the 1300 mark, a nice round number, and as long as it remains bouncing along this so-called very strong resistance support, then you'll probably more likely see price trying to reattempt those highs or prior highs. However, going into these highs or reattempts, you can see that price action really favored or falling short after this attempt we had back in mid or late February. But if we do get a break above this area here, this consolidation area here around 1325, 13300, then ultimately we're looking at the 134,500, which will bring us back to roughly around the institution moving average. So let's see if price can actually settle at 1500. If it fails and breaks below that and closes lower than that going into the US session, then ultimately we could see further potential to the downside. Yesterday's candle, we had a nice bullish engulfing, but as the close of the US session, we saw price putting right back and trading above the 50% of this downside candle. So momentum still favoring upside. As long as it can find support or build on the support here at 1500, then we should see the 1325 and the 13300 being tested quite soon. On to sterling, good old cable. This one over here, fantastic news recently. We had a nice break above the 1600, and we've seen price rally to the upside since. So we had Friday, Thursday, Wednesday's close, really making a move, nice bullish engulfing. We've got our candle, all the moving average below price, and the CTC was in our favor. And as I mentioned, as long as it maintains above 15,800 and above all the institution in particular, we're going to see price rocket. And sure enough, we had this nice bullish engulfing, break, slight hesitation, and then a continuation right up to another price support and resistance, which is quite noticeable. And you can quite clearly see I marked it really well here. Very strong band here, just above the 1500 mark. Yesterday's candle pulling back after the news about the French elections, however, closing strongly on the US session and pretty much not breaking the psychological high at 1500. Ideally, if this is to remain stronger or to remain strong, we do need to see the 1500 being breached quite soon. If not, we could see further pullbacks occurring. And if that's the case, then we just take the low here where we saw price really moving higher. When we take this 1500 mark as our resistance, then you could see that potentially, like yesterday, the 23.6 pullback here at roughly the 1607 could be our ideal target for the remainder of this week. So got to see price breaking this 1500 quite soon to see any further extensions. However, if we don't see that, then we can see consolidation on the underside of very strong resistance and potentially a pullback towards the 23.6 at 1607 and ultimately back to 38.2 and 50% would take us back to 1600. So be aware of that. On to good old Swissy. Let's have a look at this on the daily. You can quite clearly that price has been moving from a high point, and we've seen no swings over the past couple of months. As you can see quite clearly, price over the past month or so has been finding or moving sideways in a consolidated pattern, and the 910 has been acting as a support area for this pair. Noticeably, Friday closed very negative and tested the 910, and however on Monday we saw price rallying to the upside. This is pretty much news on the presidential. We saw a nice little bounce here, psychological bounce. However, this bounce failing to actually break higher than this downtrend. This consolidative pattern here through 920 over a long period of time, a number of weeks, really showing a noticeable resistance level, and we had a shooting star to confirm that resistance was genuine, and we've seen selling since. A lot of indecision, then we saw the sell mark. However, 910 does need to be breached to see any further indication of downside movement towards the 900, and ultimately back down here towards the 3,500 mark, which would take us back to the institution on the daily. So as it stands now, we've had a bounce yesterday. However, the 20-period moving average acts as a nice little resistance level for this on the Asian session this morning, and is pretty much trading between those 2 points, the 50 and the 20. CTC strategy template remains red, so it's telling us the sentiment is negative. We have this bearish engulfing here, which really is telling us the sentiment is negative. However, we are going to a squeeze now. There's a squeeze between the 910 and this downside trend line. We do need to see a break below 910 to confirm that the sentiment is genuinely looking bearish. And if that is the case, then 9,000 or 900 here, 0.900 would be our ultimate target, because that happens to be the prior support or in this case. So looking for a break below 910 would take us lower. However, if we don't get that and we break higher than this trend line, we do need to see the strong resistance level here, 920, being breached, and there seems to be more resistance than support. So it's likely we could see potentially for a drop lower. However, we do need to see 910 being breached. If we do see a failure, look to see if there's any intraday charts to the downside towards the 910 as your first target. But ultimately, all of those of you who are looking for long-term trades do need to see 910 before we see any trades, potential trades to the downside, as we go into this consolidative downside trend at the moment. So be very, very patient. Look for a nice bullish or bearish engulfing before we see a trade towards 9,000. If not, we could see consolidation in this squeeze pattern. If it does break to the upside, it would have to be some fantastic news, because there's a hell of a lot of resistance above it. Last bit of the day is US dollar Japanese yen. Let's have a look and see what's been happening. Massive move to the upside over the past couple of months, and now we've had a massive or steady retracement occurring on this pair since these highs at 8,400 were tested quite recently. Off 8,400, nice round number, but also very strong support and resistance going back previous months. Potential targets were 23.6, the 38, and then back down towards the 50. Didn't quite make the 50, and we had a nice little psychological bounce as we headed into this very strong prior support and resistance level here at 880. As long as it maintains above the 80, then there's potential for further upside movement, as price has in the past used 80 as a very strong support. So if price remains above 80, then there's more potential for price to bounce higher. However, over the past couple of days, you can quickly see that the momentum jump has phased out or petted out, and you can see that price has failed to break above the psychological this interim downtrend from our highs we saw recently. Swing low, swing low, swing low, and another swing low. And this here forming a little evening star formation on an upside trend, up, 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 indecision, and then we've got our decision candle which engulfed the prior candle up, and then we've seen price on the Asian session trading lower than the 38.2 February tracement. If it fails to break above this or find support on it today, then we could see potential for price to continue to the downside towards at least the 80%, the 80 mark here at the 50% line. CTC remains undecisive. We have two parts of our strategy, or three parts, apologies. We have a red candle, two parts, apologies. We have an arrow, candles are red, however the actual band on either side is still blue. So remaining blue primarily because we're still very much in an upside trend, and if we don't see price actually finding support here at the 38.2, we get another, this being a nice bearish candle, and we see it close below that, then ideally we're looking at 80 as our next potential target. So wait, be patient, look to see if price fails to make any any support here at the 38, which would be, what would that be? The 8100 mark. If we fail to seeing price finding support at 8100, then there's more potential for price to continue to fall towards 80. If it does find support at 81 at the close of play today, then there's more likelihood of the upside towards the 23.6, which would take us to the 80-20 mark as our first target. The hourly chart is showing that RSI is below the 50, and our CTC is very much in our favor. We have red across the board, moving average all above price and the institution as well. So as it stands now, we could potentially be looking at price falling towards at least the 80-30 mark, going into that 800s. So as it stands now, you can see that from the low here to the high, the 61.8 fib line is being tested as support. We've had 3 consecutive hours of support over here. We do need to see a break below this 61.8 in order to see further continuation to the downside. Are we seeing a breakout, the pullback, and then a continuation? We saw a lot of support through the institution moving average. Now we've had a decent break. We're going to see a pullback. We've got to see a failure here at the 81.05, which would be the 50% line, before we see a continuation to the downside. Okay guys, that's it for today. Hope you have a fantastic trading day. Keep everything nice and simple. Follow the rules of the CTC, please. Back it up with sound money management and keep it simple. Okay, don't make it over complicated. Just look for strong support and resistance. Make sure where price is trading in relation to that strong support and resistance. Look out for breakouts, trend direction change. Look for those candlestick patterns I mentioned. And most of all, trade serenely.